All right, let's dive straight into this. Welcome to today's explainer, where we are going to unpack the ultimate compound interest blueprint. We're getting right into a radical concept that honestly flips everything you probably thought you knew about getting rich completely upside down. We're going to explore the blueprint for turning ordinary pocket change, the kind of money you barely even notice leaving your wallet, into massive, life-altering wealth. And let's be clear up front, this isn't about getting lucky. It isn't about some secret insider trading tip. It's about a mathematical reality that ordinary people use every single day to quietly build absolute fortunes. $1,000,000. Just let that sink in for a second. What if I told you that a single $100 bill could eventually become $1,000,000? It sounds completely fake, right? Honestly, our brains are almost hardwired to reject that idea because most of us operate under this assumption that becoming a millionaire requires one of three things. You either land a staggeringly huge salary, you somehow win the lottery, or you're just lucky about to be born into money. But the concepts we're unpacking today, they completely debunk that myth. The reality is that is simply not how most millionaires are actually created. It's time to completely reframe how we look at building wealth. I mean, we all grew up hearing the exact same golden rule, didn't we? Work hard and save money. It sounds incredibly responsible, but the reality, that common piece of advice is actually a massive money lie. Why? Because of a silent wealth destroyer called inflation. If you just work hard and leave all your cash sitting in a normal, everyday bank account, inflation is literally eating away at your purchasing power year after year. Saving money alone will not make you rich. In fact, leaving it all in a traditional savings account means you're actually losing ground over time. Wealthy people understand this fundamental flaw. They don't just save their money, they put it to work, they invest it. And that brings us to the ultimate investing weapon, compound interest. This is essentially a giant financial snowball effect. It's the process where your money makes money. And then, and this is the crucial part, that new money starts making its own money too. Albert Einstein famously called this the eighth wonder of the world. And man, it's easy to see why. At first, when you start, the growth looks tiny. It feels like absolutely nothing is happening. But as that snowball rolls down the hill, gathering more and more snow, the growth becomes completely explosive. The problem? Most people just quit way too early, long before they get to see the explosion. So let's get real for a second and see how accessible this wealth-building weapon actually is. Let's talk about investing just $100 a month into a straightforward S&P 500 index fund. We're not gambling on crypto hype here. We're not trying to pick individual winning stocks, just owning a slice of the broader market. When we break down what $100 a month actually looks like in our daily lives, it's honestly eye-opening. It's less than eating out a few times. It's less than those random late-night Amazon purchases that magically show up at your door. It's just a couple of Starbucks drinks a week. We are talking about highly relatable everyday expenses that can so easily be redirected into an investment account. Now here's where things get wild. Let's look at what happens to that $100 over time. The historical U.S. stock market return has averaged around 10% per year. If you redirect that coffee or Amazon money, just $100 a month, into the market, the exponential growth curve is just explosive. After 20 years, you're sitting on around $75,000. Not bad, right? But watch the jump. By year 30, it's over $200,000. And by year 40, you are nearing $600,000. And if you happen to invest just a little bit more each month, you easily cross that $1,000,000 mark. You don't achieve this because you're a financial genius. You don't achieve it because you got lucky. You achieve it because time is doing literally all the heavy lifting for you. Which brings us to a rather painful truth about human behavior. If the math is this simple, why does almost everyone stay broke? Well, it's because of a huge behavioral trap. Most people are completely addicted to short-term pleasure. They're trapped in a system designed to keep them buying liabilities. The newest iPhones, expensive cars, designer clothes. It's all instant gratification funded by credit cards and car loans. People are drowning in debt just to look wealthy. Meanwhile, the rich are quietly focused on buying assets. True wealth isn't about looking rich. It's about owning things that make money for you while you are fast asleep. It's about collecting long-term assets that grow for decades while everyone else is busy swiping their credit cards. To see how this builds into something truly mind-bending, let's compare two different investors. This is going to show exactly how compound interest favors time over literally everything else. Okay, look at person A. They start early, at age 20. They invest $200 a month for just 10 years. And then they completely stop. They never invest another dime. Then we have person B. They wait, they start at age 30, but to make up for lost time, they invest that exact same $200 a month continuously for 35 straight years. So who do you think retires with more money? I want you to seriously think about this for a second. Person B put in significantly more of their own hard-earned cash out of pocket over a much, much longer period of active investing, 35 years of continuous effort versus just 10 years of effort from person A. Logically, it feels like the person who worked harder and contributed more cash over a longer period of time should be the clear winner, right? But here is the shocking reality. Person A actually wins. No way, right? But it's true. The person who started at 20, invested for a single decade, and then never touched it again, actually retires wealthier. Why? Because those early years gave compound interest more time to work its magic. The snowball was pushed down the hill a full 10 years earlier. This is the exact reason wealthy families teach their kids to invest as early as possible. Time is the real secret. It's not your income, it's not your intelligence, and it's certainly not luck. Every single year you delay investing can literally cost you thousands or even millions in future wealth. Delaying is without a doubt the single biggest financial mistake you can make. Okay, so what should you actually do with all this information? Well, here is your highly specific, actionable 4-step millionaire game plan. Step 1. Invest consistently every single month, even if the amount is tiny. Consistency beats perfection every time. Step 2. Buy long-term assets. Step 3, and this is absolutely critical, never panic during market crashes. The historical reality is that US stock market crashes are temporary, and the market has always recovered. If you pull your money out in fear, you interrupt the snowball. And finally, step 4, reinvest your gains. When your money makes money, you leave it right there to make even more. That is exactly when compound interest becomes an unstoppable force. Just to briefly clarify step 2, what exactly are we talking about when we say long-term assets? Keep it simple. We're talking about broad market investments like S&P 500 index funds, which track the biggest, most successful companies in America. We're talking about ETFs, or exchange-traded funds, which offer similar broad exposure. And we're talking about dividend stocks, companies that actually pay you a portion of their profits just for holding their shares. These are your wealth engines. You do not need to overcomplicate this. You just need to acquire these assets steadily over time. As we wrap up this explainer, it kind of brings us to a very urgent, almost philosophical conclusion. Right now, there are people out there wasting their money trying to merely look rich, while others are quietly using the exact simple math we just went over to become financially free behind the scenes. So the real question you have to ask yourself isn't, can I become a millionaire? We've proven the math says you absolutely can. The real question is, how long are you willing to wait? Because every single day you delay taking action, compound interest is quietly moving forward completely without you. I want to leave you with this absolutely classic, powerful final thought. The best time to invest was yesterday. The second best time is today. One day, years from now, you will either look back and deeply wish you had started earlier, or you're going to be incredibly grateful that you took action today. The blueprint is right there in your hands. The math is totally proven. And the only missing variable is when you decide to start rolling your own snowball. So what will your financial snowball look like 10 years from now? Thank you so much for joining me for this explainer, and I'll leave you to think about exactly how you're going to take action today.